Jumping over to vol. So crypto range is obviously getting tighter. Realized vol absolutely collapsing. You can see that in the yellow lines, really taking a steep nosedive back below 30%. So, we haven't seen crypto realized vol on a 20 handle very often. So it's basically the year-to-date lows. So we see it really taking a big nosedive there. Implied vol is obviously getting dragged lower. So we are seeing a trend lower in implies, but they can't really keep pace with the ferocity of the moves in realized vol. And we did see fresh supply of options that keep from yield earning mandates that keeps pressure on the vols, driving those implies lower. But there's a bit of a limit to how low they're going to go. Obviously, the debt ceiling concerns as well are going to keep some potential risk premium in that vol, which is why we see positive carry again. So positive carry in the order of magnitude of 10 to 15 vol points has come back. So it's a bit more normal to see that sort of a harvestable risk premium or variance risk premium, if you want to call it, back into the curve. And we think that risk premium, like I said, is probably because there is some element of not wanting to just smash the vol down so much ahead of what could happen on the debt ceiling. Okay, and then lastly, even as gold has been correcting lower on the back of the dollar firming up recently, BTC has held up pretty well, right, on a relative basis. So I thought that was interesting because BTC was starting to behave a lot more like gold than it was equities. But then even as gold has corrected pretty hard to the downside, BTC doesn't seem to have cared that much. It did test down, but then it rebounded, even though gold is kind of sitting there near its local lows right now. Equity markets also are so far assuming that a debt ceiling deal will be reached. They've obviously traded back to the top of the range, led by tech stocks. So maybe there is some element of crypto caring that stocks have gone back to the highs, and so that's preventing crypto from really collapsing as well. Okay, but basically crypto's not moved decisively with any of the other asset classes, and correlation with other asset classes continues to fall. So this suggests that crypto specific stories will be needed to break the deadlock unless something really big happens in macro land. So if we get a monster move in macro, then sure, crypto gets dragged with it. But outside of that, the only way this crypto market's going to really do anything major is if we get a crypto specific story. Okay, so that's what I'm seeing in realized vol. We then go to term structure. Bitcoin term structure hammered back into contango as vols collapse due to the poor realized. So we can see here BTC was pretty flat, got slammed in the front. ETH, slight contango, continues to steepen that contango. Actually, the ETH curve is a bit steeper than the Bitcoin curve, which makes a change because ETH realized vol has fallen below BTC realized vol on a 10-day, and it's taken the front end Ethereum vols to new lows. So really that front end of ETH is getting dragged down pretty damn hard with the realized volatility. You're looking at the vol spread, it has upticked slightly on the week, but it's still very, very low, historically low. You can see that down here. Now, the long end has held up better in terms of ETH. So you can see here, long end went down, but not quite as much. Bitcoin long end dropped by more. So we are seeing the long end kind of vol spread back at around 2 vols, something like that. But the front end is closer to 0. We still think having a long vol bias in Ethereum makes sense given the level of these vol spreads. But obviously we wouldn't be in gamma space. We'd be more in Vega space because of the mean reversion story. Calendars could still steepen further. This is something my friend Greg over at Amberdata has been talking about, saying for this level of implied and realized vol, you would expect curves to be historically steep, but they're actually not that steep. So if you look at the difference between, say, 30-day vol and 180-day vol, that could easily steepen far greater, and you get this 30-day collapse if realized vol stays in the 20s, right? So that is a potential opportunity where you can own vol in the back end of ETH, and you can sell some 1-month stuff against it, keep your carry bill down, maybe even earn carry, but own that vol that you think is looking historically low and will likely re-rate at some point, right? So these are the type of structures that you could be getting into. Maybe owning medium-term downside in ETH versus selling short-dated Bitcoin at the money stuff, given that the vol spread is flat. If you wanted to combine a long calendar trade with a relative value trade as well, those are the type of things you could think about doing, okay? Then lastly, looking at SKEW. So call SKEW, which was apparent across the curve in the BTC term structure last week has faded as spot failed to muster any kind of rally and call supplies come in from overwriters. This has taken SKEW back to a mild put premium, particularly in the belly of the curve in the 1 to 3 month area. Okay, the front of the curve is at about 0, but you have got to put premium pretty much everywhere else. Ethereum SKEW, which obviously has been more stable input premium, is considered to, and that's because it's considered to be more likely to trade down with risk assets and not catch this kind of flight to safety bid that both gold and Bitcoin were getting during the banking turmoil. Makes sense. That's why ETH has had a more consistent put SKEW. We do think the shift into put SKEW in both assets is reflecting to some extent the risk that once the debt ceiling is raised, which seems to be the market's base case expectation, net liquidity will turn south as the TGA account, the Treasury General account, which has been drained down to near 0, needs to be replenished. And the way that gets replenished is by bond issuance by the Treasury, because they're allowed to issue new bonds because the debt ceiling is raised. And when that happens, those bonds need to get bought, and that's going to suck dollar liquidity out of the system. And arguably, that is going to hurt crypto assets and maybe other risk assets as well. So that maybe that's why we're starting to see a little bit of tail risk to the downside come back into crypto across both Bitcoin and Ethereum. And then lastly, given the uptick in medium-term BTC SKEW, we think put switches might make sense. So where you could buy an Ethereum put in the medium-term part of the curve, 90 days, 180 days, something like that, and then you could sell Bitcoin puts against it, and you have that on a relatively flat vol premium, but you know on the way down, you're fairly confident that ETH is going to sell off harder than Bitcoin, right? If that is your opinion, and that probably is an opinion that most people have, then those put switches can be a decent way to get exposure to that. Okay, right. That is it for SKEW. Looking at the dashboards, obviously because spot has kind of stayed near the bottom of the range and vols are so low, clearly they're all saying buy calls, like they're going out of fashion. And that in itself is not a bad trade potentially, but obviously the carry is positive. So you might be wary of paying 15 vols a positive carry, given that this thing just isn't moving very much. So some sort of call spreads or ratios may be a better way to manage that carry. Something similar to what I did last week when I put on some 1 by 1.5 call ratios, which we'll have a look at in a bit. So those are the sort of things that are coming up on the dashboard. Moving on, looking at flows, what have the big players been doing? So options volumes have drifted slightly this week. As you know, it's been more volatility trades and less directional trades than what we're used to seeing, basically, because there is no direction in the crypto market. So people are like saying, okay, well, it's not really going anywhere. So what can we do with the vol? Okay. So we did see a few early buyers of calls before the market. That was earlier on when people thought maybe the market tested the bottom of the range and then bounces. But in the end, we just kind of stayed at the bottom of the range. But we did see kind of 26th of May, 30th of June upside buying in these various strikes from 28K to 32K on the strike zone. And then as markets kind of stayed locked in the range, gamma sellers came in. We saw these big May 27K straddles getting sold. We did actually see some straddle buying as well a bit later. We saw the 2nd of June and the 29th September maturities getting bought. So some straddle sellers and some gamma straddle sellers and then some straddle buyers. And then the downside was also sold 30th of June, 22 puts here, and some protection getting rolled from May 25 puts into the June 23 puts, basically. So those have been the predominant flows that we saw in the last week in Bitcoin. If we then look at Ethereum flows, still dominated by call sellers, keeping pressure on the implied vol. Yield earners have been pushing out the curve as far as 29th of September. It's a massive call calendar, went up in 60,000 lots, 2,200 strikes. We mentioned it last week because it actually traded on Tuesday. But that has been the most dominant flow, and that has led to a bit of overhang, a bit of Vega supply in the Ethereum market, because that's quite a big clip of Vega. It was about 200 grand of Vega or something like that was traded. So people have kind of got Vega to recycle, and then we've seen more call selling in the June, July, and September expiries here over the course of this week. Okay, we saw an interesting roll as well. The June 1500 puts were rolled into the September 1000 puts in a decent clip, like 20,000 options. But remember, those options are very low premium, very low delta options. They're worth like about $20, those options. And then in terms of the upside, we did see a few May calls trading. These are these pink blobs here across various strikes from 1850 to 1950, and a longer term trade that looked directional, which was a buyer of a December 2500, 4500 call spread. Okay, so that's a more structural, slow moving long that isn't going to decay very fast, but gives you exposure to a crypto bull market if it was to materialize later in the year, because the Fed pivoted, started cutting rates, and everyone was like, okay, we're going back to more easy monetary policy. Okay. So those are our major flows this week. If we then look at dealer gamma, where are we on dealer gamma positioning? So dealer gamma flips long and suppresses realized moves. So that's the general message, right? So BTC dealer gamma been back down to neutral. It did flip positive after expiry. So we had been in negative territory down here. We then flipped to positive after the expiry rolled off and some short strikes rolled off. And then now we've been drifting back down to neutral as dealers get supplied, as markets kind of move towards a more neutral positioning. Okay, looking at where the big strikes are for this Friday, we got 27K is the big long strike. Above that, dealers are net short, but not massively. Below that, they are short the 26s, but then they're long behind that at 25. So this will be a fairly neutral place. Here it's going to be long. If we stay near 27K, I'd expect the gamma to increase and the dealers to get longer, and it becomes even more of a sort of pinning effect. But then if we move to the upside, we can get away from that gamma. On the downside, we're probably just going to be trapped in this range, right? So we probably won't break 2,500. So we'll be kind of stuck in that 25 to 27 area, I suspect. Okay. If we look at Ethereum positioning, it's been trending higher. And it's all because of this big 1800 area where dealers are very long. They're long the 26th of May, but they're also long the 30th of June. So these are the big expiries. Obviously, the longer we stay here going into expiry, the higher that gamma is going to get, right? So there's no surprise to see the gamma positioning go higher, and we'll probably see one final spike higher as we go into Friday if we're still in the vicinity of the 1800. Okay. The real question remains is what type of flows do we see next week after this expiry rolls off to then replenish these trades? And we've already started seeing people selling fresh clips of vol in June, July, September. But it'd be interesting to see if more weekly gamma comes out and gets sold to the street, even at these record low vol levels. That remains to be seen, right? It looks to me like people are looking at those record low vol levels in the front and saying it's not worth selling it. So I'm going to sell the longer dated stuff that's got some term premium. And that's what's driving the curve down and actually making the curve flatter than it otherwise would be, because people are kind of preempting that and selling longer dated stuff at that higher vol level, basically. Okay, but in general, ETH realized has collapsed as a result of this big vol selling flow and these big strikes in this vicinity. And it's difficult to see what's going to shake Ethereum away from here in the near term. So for the rest of this week, I'm struggling to see ETH materially getting away from 1800. All right. Okay. And then what have I been doing? And that is me done for this week's Crypto Weekly. Thanks a lot, everyone. I'll catch you next week. Cheers.